This is the MTPredictor weekly market update for June 23rd. So we had an interesting week. We had the Fed meeting. We got that out of the way, and options expiration Friday as well. Obviously the Fed was a market mover. It's been a while since the Fed has really moved the market like this without moving the interest rates. The talk was about a kind of a winding down of QE. If certain objectives are met and so forth. Okay, the question is whether those objectives will ever be met in order for them to start unwinding this. One thing we do know, just food for thought, we talk about interest rates. We've seen bonds selling off, which has been moving the interest rates obviously higher. And again, when interest rates or inflation specifically is below 2.2%, stocks grow. I mean, they grow by about 13% on average since 1950. But when interest rates start to creep up between that 2.2% and about 5%, the return is cut in cut in half. Let's say 8.5%, a little less than that. But if we just return to historical norms, which say is around 7% plus or minus, the return of stocks is basically zero since 1950. So the interest rates and the inflation is going to be the real key here to watch. Obviously, if bonds sell off, rates go higher, interest rates go higher, it's going to put pressure on real estate. If you look at the demographics for real estate and the kids coming up. With all the college debt and defaults that are happening, their debt to income when they get out of college is about 60%. They're not going to be much of a position to put down payments on housing, so this is going to be a big impact with higher rates. If this is the case, if we get higher rates and their inability to come up with down payments and so forth, lenders don't want to lend when assets are, this obviously would put pressure to the downside on real estate. Lenders don't want to lend when the things are depreciating like that, or they're less willing to. So this could create a whole new, financial picture than what we've seen with all this quantitative easing. Whether or not the Fed is going to be able to unwind this or not remains to be seen. So anyway, obviously that's impacted the market, and we anticipated that we were going to see selling. So here's the S&P Mini here. And we looked at this. We projected the wave 4 pullback in advance. We were anticipating, since we went wave 3 up, that we would be correcting back at least to this wave 4 support area. Let's just check the top of the area here and see. Just shy of that in the S&P. Around 1554 or so is the top of the wave 4 area here. We can project up wave 5 at this point. I think we already did that last week. I'm just going to use the tools in the software here to look for up wave 5. Just turn this back off. So we've had here's our minimum wave 5 target just above 1700 in the S&P. So we're going to see if on this pullback, if we find some support. Again, we had strength on the STF. Now it's come off the strength band there. So we'll have to see if this support holds and we get another leg up into wave 5 and then at 1700 area on the current contract here, the S&P. And then if this pullback is fairly shallow, kind of similar to what we had between wave 1 and wave 2 here, then and we get a wave 5 up, then we would be looking for maybe a more significant correction back at least to the wave 4 DP, maybe beyond. We'll see. If we look at the let's look at the NQ here. Again, your same analysis. We had this analysis. I just left this on from last week. Just shy in the NQ of the wave 4 support there. We've got high volume spikes coming in here on the weekly chart. and we're going to find out if that's either professional buying or selling here, probably depending on how we close the week. We've got neutral candles here on the NQ. If we get a blue buyer's candle to close on the weekly, that'll tell us that buyers are now overcoming the sellers, especially if we can get into the actual support area, and then maybe we can make a last push into wave 5. We do know we had that Hindenburg omen out that was confirmed a few weeks ago, and so that takes the average market, which has a less than 1% chance of a correction or crash on any given day, and it takes that and puts the odds at 1 in 4. And so obviously we have seen a corrective move here. We'll see if it continues. And just based on the pattern, as we're looking at all these markets, these E-minis are all correlated right now or trading together, which typically the moves tend to be better when they're all coordinated like this. Here's your Dow. If we look at the Dow, here is the all-time high, prior all-time high back in 2007. I'm going to take a decision point, which is a major resistance level that we had on the chart ahead of time, and you can see the Dow is in that weekly resistance. Now it's a very large area. It goes extends above 16,000, so we've got plenty of room. You see I've projected the wave 5 targets. Here's the wave 4 pullback. Hasn't made it into the actual support level. I just want to check the strong trend filter here. It's still in the strength band, in this gray band at the top. That oscillator is telling us there may be more upside ahead. So we'll see how deep this pullback goes. Again, if they take this wave 4 support area out, then we could take a decision point actually off of the bottom of wave 1 here, and that would give us a target that would be below 12,000. But we'll see. First things first, we have to deal with this wave 4 area, maybe get one last push into wave 5 before we get a bigger corrective move, and then we'll also have that larger degree broadening trend line from the 25-year pattern. Let me just see. Let me get a trend line here. Oops. And extend this out a little bit so we can see. This trend line extends right now. It'll come up around 16,000. So you're going to have a confluence maybe of resistance at starting around that 16,000 level, depending on when this all happens. The projection out in time may be higher as this line is moving higher in time. But that's a larger degree pattern, that kind of megaphone pattern. That's a major topping pattern in the much bigger picture. Maybe we'll take a look at that more in depth next week, depending on things unfold. The Russell here, again, another wave 3 heading into potential wave 4 support. STF just starting maybe to lose some strength there. And so that again matches the other markets. And we looked at the Dow, the NQ, that's the Russell, and the ES. All right, let's look at the other interesting markets. Actually going to look at silver first here on the daily chart. So we had our wave 4 sell basically in silver down to wave 5. Actually, that first spike down achieved the minimum wave 5 target. Now I think we achieved the typical wave 5 target here in silver. Actually went beyond the minimum wave 5, not quite to the typical wave 5 here, but did trade below $20 there. We've got a blue buyer's candle, a little high volume spike on the prior week there. So we got a this week close. So could be seeing a rally here. Again, we anticipate a rally back to this wave 4 decision point. Potentially from the daily chart back to this level here. This is our weekly. You see it says weekly decision point. We can look at the weekly chart, but this is basically the wave 4 DP off of the weekly chart, and this is a major support. This is one that we're watching, because if we go to the weekly chart here, you can see again here was the major wave 5 top in silver. We anticipate that the market will correct back to the wave 4 DP. Okay, that's where we're in now, trading just to the bottom level of that range. Alright, so if this level, this wave 4 DP gives way, again, the danger is that the whole 5-wave pattern to the upside here gets erased. We look to the bottom of wave 1 here. We take a decision point off of that level, and that gives us another potential target around that $10, $11 area for silver. All right, again, this is, well, this is paper silver. That divergence that's going on between the physical market, where there's actually the demand is outstripping supply, versus the paper market, where obviously the sellers are overcoming the buyers here. So there's this divergence going on. The central banks are net purchasers of gold still, and so they're buying. So the play basically has been selling the papers, gold and silver, and buying the physical. And this is not mom and pops. These are people that are able to buy directly from the mint and so forth. So, which we're seeing is on pace to have a record year in the physical market for sales. So, an interesting situation here between the paper and the physical, which will eventually get resolved one way or the other. But dollar index, again, there was their area here. It's the area I like to say where Jim Rogers was buying. Hit that initial target here. That next target's out here. You see gold did get a the dollar did get a boost here, which means our euro rolled over a little bit in this wave B level here. And so we'll see if the euro, which was selling off, got a retracement back up, if that will continue as it fell off last week, if that continues to fall off. And finally, we've been kind of looking at the some of the smaller time frames. Again, this is the Dow Mini, just to show you the analysis on the smaller time frames. If you're trading intraday, is the same as if you were trading off a weekly chart or daily chart. So it's fractal. Let me clear all the analysis off here. But here was a what we call decision point buy signal. This looks for market tops and bottoms or turning points in a market. There's divergence here. We don't get this signal on the chart unless in this case we have a lower low in price with a higher low in the oscillator here. That software picks up that divergence. We're also in a what we call a decision point support area, and that's what the other part of the signal. There's the support area off of the last swing there. But the other interesting thing about this is the pattern that was involved here. Now, normally we teach our new traders if they're going to be a buyer here, this STF is red, meaning the larger degree trend was down. Therefore, they would avoid buy signals because we want them trading with the larger degree trend and not against it. But when they get more experience and they can put these Elliott wave patterns using the software on, you see we were right in a minimum wave 5 target with a decision point with divergence. And so we anticipate we can be a buyer here. Analyzing the setup, the software tells us, this particular account risking 2% can trade 4 contracts, risking $340 with a target here of 3 times our initial risk. So on a $340 risk, you take out about $1,000 if you can get to the target there, which obviously this was achieved. So this is a good low risk, high reward setup where you can pick market tops and bottoms because you have the proper tools to do so. And so again, the analysis could be a 1 minute chart of rice, or weekly chart of the euro. It doesn't matter. The patterns are all the same. They have been for Steve Griffiths, the developer of MTPredictor, has gone back 100 plus years looking at these charts, and the patterns are still all the same. They still unfold, and the tendencies are the same. So the key is to make picking a bottom like this no more risky than any other trade where you're trading, kind of capturing the meat of the larger trend, is to take a low risk, high reward setup at a potential top or bottom, because you're not going to be right all the time for sure. But even if you're only right less than half the time, if your average winner is 2.5 times or 3 times the size of your average loser, you can still do quite well over time. So anyway, we'll leave it there. I used up pretty much all the time. We'll come back next week again. We'll see as things unfold here week to week, month to month, if the Fed is able to do any tapering, as he called it, I guess, or not. I'm a little skeptical about whether or not the conditions will be met to in fact do that. There may be other reasons outside of what we see that the Fed is needing to do the tapering. Maybe we can look at that next week if things come into things come into play here. So enjoy the rest of the trading week, and we'll be back on next Sunday to do it all again.